Hello everybody, welcome back. So let's have a look at Bitcoin, Dixie, S&P, Euro, and Bitcoin dominance, and then we'll also have a think about what the CPI data could be today, which is the CPI is coming out today, and then the FOMC tomorrow, which, as far as I'm concerned, is basically either 50 or 75. There's nothing more than that. There's no reason for them to go lower than 50. I think 75 is probably the best thing for them to do, given the strength in the markets, which you might disagree with that, but the strength in the markets and the weakness of the dollar, I think 75 is fine. Yeah, leave them to it. Anyway, let's start off with traditional markets, shall we? So this is the S&P getting that bounce on the weekly, which was exactly as expected. So your Bollinger Band Center, your 10 exponential, and also your horizontal, which comes in roughly around 3,900, and with that we should expect a retest of at least 4,000 and maybe even a little higher than that, back up to this descending trend line. So again, if we just take off all the noise, it's very easy to see this is still very much a bear market rally until broken out of here. So let's just turn off this telegram for the minute. Feel free to join it though. So yeah, downtrending still in the descending triangle. Should expect nothing more than a rejection around here. Anything above that is still a bit of a bonus, and it's only if we start to close weeklies especially, but dailies will do, above 4,200 on the S&P. That would mark the end of this part of the bear market, and maybe we start to accumulate within this kind of area. Doesn't mean we can't just come back down, but I still think that there's a good chance, a very good chance, that the bear market is finished for traditional markets. You hear me say that all the time. So the Dixie is still downtrending. This is Dixie on the daily here, so below all major moving averages, all of them, below the 200, the lot. And so with that said, you should expect it to continue to go down. Rejections on the 10 exponential for the most part since this big rejection over here. So bang, 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 bang. So if we do move back up, especially today with volatility, which is likely to be seen, you might see wicks, savage wicks, moving up to what, 105.6, 105.8. So that's your 200 simple, or your 20 simple, so your Bollinger Band Center and your daily. The weekly still offers a little bit of hope for dollar bulls, and that's fine, because we did suggest, or not suggest, I mean we called it. I called it, that we get a rejection on this top of this trend line here, all the way down to the 50 exponential, and so far that's held up pretty well. So the weekly analysis is still okay. So the weekly still wants to bounce from here. It's not had a good time trying to bounce, but it still wants to bounce from there. And if it does bounce, then 107, 107.3, and maybe 108.8 is on the cards. But this is weekly, all right? So weekly, and in order to get a bit more of a handle on the weekly for the Dixie, you have to really think about the euro. So I'll just have a quick look at the euro, just very briefly. And the euro is pushing resistance at the moment. Again, still in this ascending triangle, where you can come all the way back down to 101. If that were to happen today, that could happen. It can happen. I don't see it at the moment. It's still trending and trying to push this resistance here. If a breakout from this resistance should start to take us up incrementally by about, maybe about 1 to 1.5 cent. But basically, it would be a turning point for it. At the moment, I'm not particularly convinced. I believe it when I see it, but it's not weak on the daily there. It's definitely not weak. The 4-hourly definitely looks a little weaker, sort of curling over here, but still not really a problem either. Still very much in keeping with an uptrend, although it does appear to be running out of steam. Again, everybody waiting for the CPI and the FOMC. Not willing to trade FX pairs, not until we get a bit more of a handle on it. And before we go into Bitcoin, the Bitcoin dominance chart actually broke out of this ascending channel, which is, it's a rising wedge ascending channel, whichever you want to see it. We looked at this a few days ago, expected a miniature alt season for as in like maybe a day's worth of price action is all I was referring to. And no, we didn't get it. It was a fake out, a fake breakdown, should I say. And now we've broken right out. Now, a lot of this, if not all of it, is to do with the FUD surrounding Binance at the moment. The Binance doing money laundering, blah, 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 blah. Look, there probably was a fair bit of money laundering going on Binance, like there was on all exchanges, right? So I don't know how old you are or how long ago it was that you bought your first Bitcoin, but Bitcoin was basically a black market, dark net currency. That was what it was famous for. That's probably why it gained so much market cap in the first place in the early days. And in order to exchange that for cash, you need to cash that out. So all of these exchanges will have been in part to do with money laundering. This is why KYC is a very important component. If you're looking to get on an exchange that wants to survive and stand the test of time, KYC means that if you are going to money launder on here, I want to know who you are. Okay, simple as that. Okay, if you're on a Wild West exchange that doesn't care about that, then you have to think to yourself, right? Okay, so if you don't care about that, why don't you care about that? Is it because you want to attract a lot of dodgy money? Probably is. KYC is there to protect you and the exchange and to, well, I suppose, highlight anybody who's coming on there with weird money. So there's probably been plenty of money laundering going on all exchanges. That's a given. But the situation now is that if KYC is a must, like it is on Binance, then it's going to be very difficult for them to actually do that now. So they've towed the line recently in the last 18 months, which is why I always found it amazing why everybody was flapping around saying, "Oh, I don't want to do KYC. This is ridiculous. Put my name and address." Says, well, like I say, I always say it, if you ever traded any other exchange, outside of crypto, I mean, you have to put everything down there. You have to put, how many potted plants do you have on your windowsill? What color socks are you wearing today? You have to put everything in there. So KYC is no big deal. Anyway, I've deviated from the point. Either way, this breakout here is largely to do with the FUD, because obviously, as we all know now, that Binance BNB is like one of the top. Is it top 3, top 4? Top 5 still, I don't know, but it's definitely a big one. So they've seen a bit of a pullback on their price due to the FUD, and so with that, well, comes a knock-on effect to the dominance chart. So this is broken out, so we can just disregard this for the moment. But if we just move it back to the daily and turn on all our noise, we do see that there's a 200 exponential floating above us here around 41.5% dominance. That I would expect would offer a rejection on this chart. Just on the first pass, we're not looking for anything major coming all the way down to brand new lows, although it can happen. I'm not massively bullish on altcoins while we sit towards 40% dominance, but we might get a rejection around here as we did over here and over here. It's generally the vibe that most charts would behave on, especially crypto charts. The most volatile charts will respond well to exponentials, and the 200 being one of the major ones. It's like a giant electric fence that surrounds the perimeter of price action, and that's basically what we're looking for here. So a little bit of a pullback on this one, and again, a little bit. We're not talking about massive alt seasons, but we are thinking about a decent reaction and a pullback, maybe down by as much as maybe 1% or so, which doesn't sound much, but it's decent. So opportunity for altcoins potentially. Let's have a look at Bitcoin. Or should we just have a think about the CPI before we look at Bitcoin? Save the best till last, shall we? So this is, we brought this on the channel a few times. This is a site called Trueflation, which is actually run on the Chainlink Oracle. Chainlink! Embarrassing, but me and Chainlink, we've got a decent relationship at the moment. We're in it for the long haul, and I suggest it's something that you guys think about also. It's pretty cheap for what it is. Anyway, this is Trueflation's independent number crunched CPI data, which shows that basically since May it's been coming down consistently, basically all the way until now. So it doesn't seem any different to the expectations that I have or the market appears to have. If you've noticed, the market's generally been okay despite being in a consistent bear market. It's not done the giant, big, super massive crash that everybody seems to be expecting or has been expecting. It's the hard landing is not going to be, if it does come at all, it's not going to be in any way like 2008 or even 2020. It's not going to be anything like that. It's just going to be a slow bleed out. So yeah, what we look at here, we're just looking at all the other things that are going up or down. The only thing that we see that is actually going up here is where was it? Utilities, and that makes perfect sense. It's cold outside at the moment, and fuel is more expensive. I know over here in this country, it's completely wrecked city when it comes to electric and energy bills. That's the only thing that's been going up. And that actually does add quite a sizable change in household expenses, to be honest with you. But everything else is going down. So, or more or less everything else is going down. That's the main thing that's been going up. So with that said, you know, this has been basically churned out by, you know, Trueflation, the independent the independent site, where we look at the UK, which is a complete polar opposite. We are feeling the pressure, but we don't care about the UK, not really. We care about the US. They're the ones who are dominating the markets, and so yeah, it looks okay for the US. Fair play to you guys, but not the UK. So when it comes to the CPI data today, probably comes out favourable, although it might not be as awesome as everybody expects. It's probably not going to be higher than it was before. The thing to focus on would be the core CPI, which would include things like food and fuel and energy prices. Right then, so let's have a little look at Bitcoin. So Bitcoin on the 4 hourly looking quite good. So yesterday was basically sideways to the max. Like I said in the video, no big upside, no big downside, just basically just nothing. And what we see here is another attempt, or it looks like we want to have another attempt at that 200 exponential on the 4 hourly. So with that said, you know, this might be the one that manages to break us above. And if we get to start closing above this 200 exponential on a daily, then, you know, on a 4 hourly, you would expect us to use it as a launch pad to start to move up to the next major area of resistance, being this 18,000 to 18,600 zone. And that's fine. If we do that, that's exactly the analysis that we've had probably for the last week or so. Probably more than that, last 10 days or so, which is the incremental steps to the tune of $500 to reclaim these areas. So it's a little bit less than that now because the 200 exponential has sank down to 17,780 or something like that, 17,278. But yeah, it looks reasonable to me to think that we are going to break this one. Again, you know, with the CPI coming out and traditional markets still got a little bit further to go. Dixie looking like he still wants to go down. These are all just small moves, not massive moves, just small moves, but enough to take us up, because this is a very, very small move to get us above this 200 exponential here. It's what is it? It's 0.5%. It's really nothing. So with all the other figures on all the other charts, looking like it's a reasonable environment to expect further upside on Bitcoin, at least by 1 or 2%, then that'll be enough for us to get above here and use this as a well, I suppose as the ground floor for the next building block up to 17,000. No, it's 18,000 flat to 18,600. Like I say, it seems reasonable to me that that's what we're going to get. You know, every day that we're above 17,000 is a good day for Bitcoin, because that in itself is a psychological building block area. But really, for me, as you all know, moving averages are more important, and you can see the relevance on this very short-term time frame here on this 4 hourly, how we're getting rejected over and over and over again. But the more times you push that resistance, the more likely it is to break. And so it does look like a decent trading environment to me, to expect further upside. But again, we're not looking for major massive moves, but it would be the next move I think is most likely going to be one to the up, take us into that $18,000 zone box. That's where we're going to be going, I reckon. Again, outside of the 4 hourly, which again, the 4 hourly is just trending above most moving averages. The 12 hourly, we are above moving averages, but still sat in a giant big fat cloud over here. Nothing special to talk about here. We are above the 0 point with the MACD. We have a bit of bearish divergence actually on the RSI, but again, it's neither here nor there. And the daily basically seems okay as well. So we are converging a little bit below the 0 point. It's not too much of a big deal. Momentum on the RSI mimics price action, so no bearish divergence there. A little bit of bearish divergence on the money flow index there, but still no big deal. And we're below the cloud, so we're not going to get any pump or buy signals. We have surfed this 10 exponential here on the daily, which is still a decent place to be supported on, because it's trying to use this in itself as a launch pad. And the next move up would probably, like I say, we'd probably get a bit of resistance around 17,600, 50 exponential. But mostly, I think it would be plain sailing into the $18,000 zone. And again, with altcoins, with the Bitcoin dominance pointing to that 200 exponential as well, a rejection from there should see altcoins follow and probably outperform Bitcoin if we get this move. So favorable environment for all markets, despite the CPI coming out and the FOMC tomorrow as well. Just keep an eye on that core inflation, which, like I said, is represented by the only part of trueflation that we've seen, which has been going up. So that is that's the elephant in the room. Like I say, trueflation is, they've crunched their own independent numbers, but what are the real figures? We'll see today. And if the core inflation continues to be up, then we'll see what the problem is. I don't know if you've noticed, but fuel, especially oil, is down. It's gone down, and it's stayed low, which is surprising to me as well, because the Dixie and the dollar is obviously going down. But I said this probably about a month ago when I said I'm more or less done trading oil for the moment, because it's so heavily politicized that it makes it more of an uncomfortable environment for me to try and trade it. Despite me expecting it to go up to 100, I couldn't really continue to trade it given the well, like I say, the political weight with the Saudis and Russia and Biden and elections and stuff like that. So I thought I'll leave that alone. And fair play, you know, it's not like I called anything there. I just said it's too risky for me to continue trading oil for the moment. And look, oil's been going down consistently. I think, did it dip its toes below $70 a barrel yesterday, which is still very high, obviously, but I'll be looking for it to, maybe if it does manage to get a bounce, probably $65 a barrel, and so all of that should feed into the fuel and utilities prices. It should feed into that, but it doesn't appear to have done. So we'll have to see what actually is going to happen today with the actual CPI. But overall, I would expect a lower CPI. But there is that element of doubt based around the core CPI, which we've already recognised is continues to go up. Right. So with that in mind, I'll leave it with you there. It's quite a long video. If you made it to the end, please like it, because YouTube loves a like at the end of a video. That shows true love. Otherwise, you know, hope you have a nice day. Take it easy.